A new Bitcoin narrative is emerging, and that, my friends, is what we're talking about today. All right, guys. So yesterday I retweeted Bitcoin Archive, who, when they said new narrative forming, they had shared this screenshot of a CNBC article with the headline, Bitcoin soars to 9-month high as investors weigh bank risks and interest rates. So this is super interesting. I have spent a lot of time looking at, thinking about, and exploring narratives and their function in Bitcoin and in crypto more broadly. And I want to talk today about the history of Bitcoin narratives, what they mean, and why this one is pretty interesting and so important. We've talked a lot about, over the last few weeks, the extent to which the drivers for Bitcoin's price increase are narrative versus market structure versus, CZ buying Bitcoin in the open market. But I want to explore specifically the narrative piece today, so let's dive in. Now, when it comes to Bitcoin narratives, there has been a long history. In 2018, Hasu and Nick Carter wrote this great piece called Visions of Bitcoin that actually went through and looked at how Bitcoin narratives had changed over time. They even had this great chart that showed sort of mentions of these different narratives and how they acceded from one to the other. They talk about the beginning was e-cash proof of concept. So in the early days, Bitcoiners or the cypherpunks rather, who were just being introduced to this project, judged Bitcoin in the context of all the other experiments that had happened so far. Then it became this sort of cheap P2P payments network. This was close to what people imagined Satoshi had in mind, right? A straightforward currency for peer-to-peer internet transactions. From there, it went into the censorship-resistant digital gold. Obviously, this has been a big part of the narrative ever since. From there, private and anonymous darknet currency. This was the era of Silk Road, right? And Bitcoin being used as a way to buy drugs and all of that. Then, and this gets kind of towards, call it the modern era, we started to see Bitcoin as the reserve currency for a larger industry. Ethereum was introduced, it begat the whole ICO period, and Bitcoin was the sort of asset that sat underneath. From there, programmable shared database, uncorrelated financial asset, that's where they left off in 2018. Only in the middle of 2018, we were only just starting to see the idea of Bitcoin as part of a larger function in the financial system, not just something that was for itself in the crypto sphere, but for people who are outside the crypto world as well. You can see here that they write, proponents of the view are generally not too concerned about owning spot Bitcoin. They are interested in exposure to the asset. Put another way, they want to buy Bitcoin flavored risk, not necessarily Bitcoin itself. This was, I think, summed up by someone like Chamath, who called it schmuck insurance, right? So this was where things got to by 2018. These narratives had sort of moved from one to the other, never really going away, but always kind of changing. And I think here's an important point to note. People cynically say, isn't this just an example of Bitcoiners finding new explanations when one doesn't work? And I don't really think that's the case, or at least that's not always the case. Instead, it's people uncovering or discovering what value Bitcoin provides to them most discreetly. And that understanding changes over time. Now, fast forward to the COVID-19 period, and we get a new Bitcoin narrative, not unrelated to the ones that we just had, but I think distinctly important. In May of 2020, Paul Tudor Jones, famed hedge fund guy, writes the Great Monetary Inflation Thesis. He says COVID-19 is a one-of-a-kind virus that has triggered a one-of-a-kind policy response. And he says we are witnessing the great monetary inflation, an unprecedented expansion of every form of money, unlike anything the developed world had ever seen. Now, there are two really important pieces of this document. The first was that Paul Tudor Jones put name to a thing that many other primarily traditional investors were feeling, that the response to COVID-19 was likely to trigger a huge inflationary period, and that in that period, assets that could sort of compete against that were going to be extremely important. the other point, the second point that was extremely important about Paul Tudor Jones' great monetary inflation thesis was that he identified, frankly, much to his surprise, that his team and he had decided after much research that Bitcoin actually scored pretty high as an inflation hedge. Now, this idea of inflation hedge, I think, has been a little bit confused in our discourses and certainly in the mainstream media discourse. You'll often see people say, well, look, Bitcoin trades just like a risk asset and it goes down when inflation is high and monetary policy is changing. So doesn't that mean it's not an inflation hedge? I think what people mean, what real Bitcoiners mean when they talk about inflation hedge is they're actually talking about a currency debasement hedge. Bitcoin exists as a currency that can't be debased. So over the long term, it is more likely to keep its value relative to the fiat currencies that it nominally competes with. In any case, the great monetary inflation thesis begat a number of additional sort of related narratives. Of course, Bitcoin as a treasury asset, the melting ice cube image of Michael Saylor, when MicroStrategy became the first public company to buy Bitcoin. That was then followed by Tesla, which really sort of accelerated Bitcoin to then its all-time highs above 60,000. Then on top of that, we got Bitcoin as legal tender in El Salvador, which, as we've seen, is very controversial, is still an experiment, and might actually be something that's sort of a little bit more political than maybe it first seemed. Something that was a middle finger almost to the traditional IMF World Bank order. All of these things were happening during the bull market that followed the COVID-19 lockdowns. But as we know, that would not last forever. What happened next was massive, massive institutional failures across the crypto industry as 2022 happened and the fastest rate hiking cycle in 40 years changed the underlying monetary landscape in huge, huge ways. So much so that by the end of last year, it was a very different narrative that was popular. Most read 2022 from The Spectator, crypto is dead. Now, this wasn't just necessarily an indictment of Bitcoin. In fact, it was much more about the types of people who surrounded Bitcoin and cryptocurrencies. This was more an FTX phenomenon than a BTC phenomenon, let's put it that way. But this is really where things were going into 2023. And so it's been remarkable over the last few weeks to see such a dramatic shift. When Silicon Valley Bank went down, when it started trading on Friday, the day that it was put into FDIC receivership, Bitcoin was around 19,600. Over the next weekend, after Silicon Valley Bank was shut down, it jumped up to around 20,000. And then over the next week, it just started to climb. It has continued to climb. It's now currently sitting around $28,000 per Bitcoin. And many people are wondering why. If you listen to Hidden Forces this week with Dimitri Kofinas and Jeff Snyder, they discuss why Bitcoin is going up. And Jeff Snyder puts it pretty clearly. He says, you look at the founding mythology of Bitcoin, this sort of chancellor on the brink of a second bailout for banks, and people, retail investors looking around, seeing these banks failing and being bailed out, and it just feels like history is, if not repeating, at least rhyming. And I think the important thing to note is that it's not just crypto people and Bitcoin people now saying that this is Bitcoin's moment. It's mainstream media. Just a few examples. Yahoo Finance, Bitcoin climbs to 9-month high as bank turmoil sparks rally. Bitcoin at redemption arc as banking pressures rise. Bitcoin surges above 28,000. Is it a safe haven from banking? CNBC writes, no, thank you. I would not like to sign up. Bitcoin briefly tops 28,000 for the first time in 9 months after bank crisis weekend rally. The point is that you're seeing all of these mainstream publications connect the dots between the bank turmoil and the Bitcoin rally. And I think this is hugely significant. A couple weeks ago, maybe a week ago, I don't know, we've lost all track of time, I did an episode asking, is this Bitcoin rally based on this sort of narrative of banks failing, or is it based on something else like Binance buying, converting all of its BUSD to Bitcoin? And I think it was a reasonable question to ask. But I pointed out in that episode that even if it was caused by something different, that narratives can have a sort of slingshot effect where all it takes, whatever the thing that starts the ball rolling down the hill, It matters more what keeps it rolling. And right now, we are seeing Reuters, Yahoo Finance, MarketWatch, CNBC, all these publications adding fuel to the narrative fire that Bitcoin is doing what it was meant to do, to be an alternative, a safe haven in the context of broader traditional bank turmoil. Now, there are a lot of people who are really investing in this narrative now. Obviously, we have Balaji Srinivasan's huge $1 million Bitcoin bet, which we talked about a few days ago. And I think that the narrative battle is going to heat up, right? It'll only take Bitcoin going down a little bit for people to retreat and say, nope, just kidding. It's just a risk asset. But I don't know how much that will matter, in the sense that the longer that this narrative goes on, the longer that it is perpetrated by mainstream media especially, the more kind of regular people are going to pick up on it. And of course, we're only a year out from the halving now, which is always sort of a narrative renewal moment for Bitcoin. And we've got a situation where Bitcoin seems to be doing well defiantly in the face of bank failures. And I think that that's going to be hugely resonant with a lot of people. So to sum up, we are seeing the birth of a new Bitcoin narrative that is, in the same way, or in many ways, just a return to the original Bitcoin narrative. Bitcoin banks on the brink of a second bailout. Huge, huge, huge emotional resonance. So anyways, guys, that's how a narrative is born. That's where we are right now. I think it's pretty fascinating to watch, and certainly exciting for those of us who are invested and who have never really lost sight of this particular narrative. Anyways, guys, hope you're having a great day and looking forward to the next episode. Peace.